But if you're China, you're not just going to sit there and say, okay, well, I'm going to do nothing. Not understanding finance and money is hazardous to your financial health.
Retirement actually makes a big difference in that sense. All right. Welcome to Unplugged Griffith Business Students Podcast. This is your host. My name is Ju.
And my name is Victor.
We have an amazing guest, Victor. This is Victor's guest, and we are so excited to have Professor Robert Bianchi. Without further ado, I want to ask you about what you do for the Griffith Business School and what is your specialty?
Thank you very much, and Victor, thank you. My name is Robert Bianchi. I'm a professor of finance. I work in the Department of Accounting, Finance and Economics at the Griffith Business School. I'm a professor of finance, so my main role is to deliver different courses throughout the trimester. So last year I was teaching a course called Global Investment and Markets, and that's where Victor met me. This year in 2025, I'm teaching the Student Managed Investment Fund. In addition to teaching, I also am involved in conducting and completing research. So I do research in superannuation, retirement, investment strategies, asset allocation. I'm also the director of the Griffith Centre for Personal Finance and Superannuation, and I'm the finance discipline coordinator. So I take on various roles, and I'm excited to be here.
In simple terms, he is an expert in finance. Because I think what many people realize, finance is a lot of different aspects. And I mean, you mentioned super, you mentioned investment fund. There's a lot of different aspects. Could you what is your experience like with Professor? Like, what did you learn from?
Well, with the class that we met, Global Investments and Markets, it really gives you that holistic view of how to analyze the macro environment, and then from there do your own. It's a very thought-provocative class where you have to think for yourself, and then look at what's going around you and ground your opinions on facts and what you've learned throughout your degree. It's the capstone course for the finance major. So it encompasses that whole research aspect, and then you guide us on how to do asset allocation and risk management, and that's basically what the class is about. And
yeah, I think like the reason why we do podcasts, as I explain to you all the time, is not many students get to talk to academics freely and have a conversation on topics like what you majored and who you are as a professor, how you have got to where you are now in terms of when you started studying, and how did you start to study what you were studying, and how you got to the place you are now. So I guess, could you give yourself a rundown? I know this is a long, journey to get to where you are, but how did you start, having growing passion for finance?
It's a great question, and I want to disclose that I am an old man, so I have a long history here. So I suppose if we start from the beginning, I graduated from Griffith University with a Bachelor of Commerce, and I majored in economics and marketing.
Yep.
Finance didn't exist in the 1980s, so graduated in 89. I saw a friend of mine wearing a nice suit and driving a nice car, and I thought, well, because I graduated and I didn't know what I wanted to do with a Bachelor of Commerce back in those days. So I decided I'll do what he's doing, because that looks all right. And he was in the financial planning industry. And my first job for 3 months was with a financial planner. And back in those days, there was basically zero or low regulation. And I walked into this office. I was given the white pages and the yellow pages and a telephone, and they said, look, you got to cold call and meet clients and sell them superannuation and insurance, and that was my first exposure to finance. And it was a bit of a shock to the system, and it's probably the worst job I've ever had. And I knew I had to get out of there. So a friend of mine sort of said, look, to study this thing called finance, you have to do this postgraduate diploma from an organisation called the Securities Institute of Australia. And they're teaching things like foreign exchange, futures markets and equities and bonds or and derivatives. And these are all things that I hadn't discovered at university. So I enrolled in that course, and I met a friend when I was enrolling, and they said, look, there's jobs going at Queensland Treasury Department. So the next day, I got my dot matrix printer, I printed out my CV, I caught the train in to the city, went to Treasury, dropped in the CV, and they rang me that afternoon and they said, can you come in for an interview the next day?
Wow.
So I went in, I think that was like a Thursday. I completed the interview on a Thursday, and they said, can you start on Monday? So I started in foreign exchange settlements, which is a very humble, modest role.
Right.
Did the job reasonably well. And back in those days, there was Australia's recession it was the recession that we had to have according to Paul Keating.
Okay.
And so in the middle of the recession, I had a job. I did FX settlements. A job came up in Queensland Treasury Corporation as a junior in the trading room there, and I applied for the job and I got the job there. And so
very quick, very fast moving. That's awesome.
Yeah, well, I think the lessons there for new graduates is that foreign exchange settlements wasn't the most exciting job, but I did the job well. People trusted me in doing the job well, and so when the next job came up within the organisation, they trust people that they know already than trying to hire an external to come in because they don't know whether they can get along with that external. So ended up doing repos. So repos is sort of the most junior job. Then I got put onto the cash fund. So the cash fund is a $1.3 billion portfolio of cash, bank bills, promissory notes, commercial paper, which is like 180-day debt investments.
Right.
Then I went on to the medium-term investment fund, which is borrowing and investing money around sort of 3 to 5 years, or in finance parlance, that's the belly of the curve. It's not the short end, it's not the long end, it's the belly of the curve. And so I did that, and I was at Queensland Treasury Corp for about 7 years. And then I had a car accident, and I nearly died.
Oh, wow.
And I was sitting in hospital, and I said to myself, I want to start a new business. I need to do something different. So I resigned from Queensland Treasury Corporation. I had wonderful years there. I learned all about risk management at QTC, and I became an associate member of the Sydney Futures Exchange. So I started a business called the Commodity Trading Advisor Business, or a CTA, and that's where you get clients and you manage diversified portfolios of futures contracts. And so
could you explain that a little bit to people in simple terms?
Okay. So everyone's used to what is a bond, or what is a share, and you have a portfolio of bonds and a portfolio of shares. But there is actually another world in finance called derivatives, and there's a whole variety of them. And so they're called derivatives because their price is derived from a physical security. So futures contracts allows you to make buying and selling commitments of a good into the future. So there are markets for gold, silver, corn, bonds, shares, crude oil, wheat. Japan, they even have futures contracts for cocoon futures and silk futures. So you can buy and sell silk in the forward market. You can buy and sell cocoons into the forward market. So there's futures markets for everything. And so back in those days, you could build, you could have a client and they could have a futures account, and they would have a diversified portfolio of these different markets around the world. So I did that for a few years, but I was working crazy hours. And a friend of mine who just finished a PhD at QUT said, Rob, you're doing a lot of calculations and a lot of back testing. Why don't you sort of formalize it into some sort of formal qualification? So through him, I was convinced to do a Master of Research at QUT. So I did that. Ended up meeting Michael Drew, who's a professor of finance there, and he said, look, you're doing such a great job. Why don't you continue and do a PhD. So
Right.
I completed a PhD at QUT, and then when a job came up as a lecturer there, I applied and I got the job there.
Yeah, yeah.
And that's where I went from industry to academia.
Yeah, yeah.
And then I was there for 3 years, came here as a senior lecturer back in 2009.
Yeah.
And over 15 years I've been here, and I went from senior lecturer to associate professor to professor. So here I am. So that's a multi-decade career summarised in a
Thank
couple
you.
of minutes.
That was a really good summary.
Yeah. And just a quick question on the side. What made you stay at Griffith for 15 years so far? What makes it special or different?
Yeah, it's a great question. I think Griffith has values that are not reflected in other universities. So the idea that everyone can come to the university, everyone should have the same exposure to the same lecturer or the same teacher or the same course. Griffith it has the principles in terms of the environment, social governance. I think that reflects really well for me personally and for students. And, for me coming in teaching finance, it's how do you teach finance within that framework and how do you deliver that? And so over the years, we started courses called Sustainable Finance and Sustainable Investing, which then sort of morphed into what we now have, the Student Investment Fund. And so the Student Managed Investment Fund has actual money from Griffith University. So Griffith invested $250,000 of its own money into the fund, and we've also had other benefactors contribute to the fund. And so right now the fund is being managed by Dr. John Fan. It has $530,000 of money in there invested in socially responsible companies.
Yeah.
And the dividends that these companies generate is used to fund a Griffith Business School student scholarship. So students that have financial hardship can apply for this money, and each applicant is reviewed, and $5,000 is allocated to the winning applicant to help with their finances. And so it's an example of finance students learning how to analyse their investments, making those decisions, putting those decisions in practice in the fund generating that cash flow that goes back to a student that's experiencing financial hardship. And so that can only be done. It's the full cycle, and we can only do that at Griffith University. I don't think any other university has allowed that type of framework to exist, and we've been able to put it into practice here. And that's how finance should be taught, how students should understand finance. It's not just about Wall Street or the Wolf of Wall Street. It's about how do we improve society. And so through the fund, we're able to sort of implement those principles and those ideals through a finance and investment lens.
Yeah, I think the practical side of finance is something that a lot of people see movies like The Wolf of Wall Street and go, oh, it's all about selling, right? But there's actually more to it. And the investment fund, definitely, I hear it all the time in Griffith Business School community. That is, it's like, how did you get involved in that? Are you quite involved in that student fund?
Yeah, well, I think it was about 2015. So I was here for a period of 5 years, and so I was challenged by people more senior than me. How do we make the finance major more interesting? How do we make it more engaging and more impactful? And so I saw these student investment funds being set up and being managed in the United States. And so I thought, well, if they're doing it in America, surely we can do it here. And so that started the process. And it was a very interesting journey, because back in 2015, when you talk about Griffith University giving students money to manage, people did not understand.
There's a lot of risks and variable factors, isn't it?
I had a meeting with a staff member at Griffith, and they said, Rob, so what you're telling me is you want Griffith to give money to students to gamble.
Right.
And so I had to sort of educate them to say, well, hang on.
Yeah, right.
This money isn't just being gambled away. There's a whole framework around how the money's managed. And so I had to explain, what's a benchmark?
Yeah.
A benchmark is what we should be producing.
Yeah.
We should invest in something that's similar to the benchmark.
Right.
But then we move away from it depending on whether we think it's a good company or a bad company.
Yeah.
So you go overweight the good company and you go underweight the bad companies.
Right.
And we should be able to outperform this benchmark. So the first couple of years was just getting people comfortable with this whole idea.
Yeah.
Because it's a big change. It's a step change.
Yeah.
And everyone has to be on board. And I was very lucky with Peter Bryant. He was the CFO at the time, and he came along and he was very supportive.
Yeah.
And through his support and obviously through our PVC of business, Michael Powell at the time, the two of them supported this idea. And so $250,000 was invested. And so that started in 2018.
Yeah.
And so it grew from 2018 to 2020. And then, I don't know whether you remember, but we had something called COVID-19 in 2020.
Oh, really?
And the stock market dropped like 35%
Yeah, wow.
in a space of 90 days.
Yeah, right.
And so the Student Investment Fund dropped a third of its value.
Yeah.
Just like the benchmark
For sure.
dropped a third of its value.
Yeah.
And they were interesting times as to, well, it's following the benchmark. The benchmark's dropped, so has the fund. But after losing 33% in the sell-off due to COVID-19, I don't know whether people follow, but the stock market then rebounded dramatically and with a lot of force and strength, and that money was recovered by the end of the year. So COVID was a real
that's
real
a real
stress
life,
test.
isn't it? Like, I mean, Student Investment Fund is more than just a practicing platform, but it's also very real to trend, very practical in the way that what you actually learn from your class, you can actually utilize that and use it to really base off your choices from your student investment fund. I think that sounds really cool.
Yeah.
Moving on to as we're talking about investments now, moving on to the strategy, there's going to be a lot of changes in the future. We're recording this on the 22nd of January, so when this goes out to be released, what we talk about today about changes might be completely different. We don't know. But can you walk us through, the US has had a massive presidential election, and the new president-elect has a lot of policies that can change the course of the global economy. It's much more focused on America first and bringing the workforce back and make America the powerhouse again of manufacturing. And how is that affecting not only the student fund but the global economy? What's the take on it?
Yeah, it's a great question, and
it's a lot to unpack as well.
there's a lot to unpack there. I mean, as we're talking, Donald Trump was inaugurated yesterday, our time, Monday their time. So we're walking into an investment environment where the U.S. economy is strong at the moment, and there's arguments that it's slowing down. People have been predicting a U.S. recession for 18 months, and they're all wrong.
Right.
So we're still moving forward with U.S. Economic strength. At the same time, there is fiscal uncertainty in the United States. So whether Biden had won or Trump had won, both parties are promising stimulatory type environment where they have to borrow a lot more money in the bond market to be able to implement the different policies that they promised at the election. So whether Biden or Trump had regardless who won, we're in a period of fiscal uncertainty, and so with that, there's a high likelihood that long-term interest rates will rise in the United States in order to be able to issue these bonds to make them attractive for investors to buy so many of them. So that's kind of the backdrop: economic strength in the economy plus fiscal uncertainty. Trump has come along to promise tariffs. So he's of the belief that that global trade is unfair and unequal, with certain countries keeping their currency low, and that allows them to sell their products to the world at a competitive price relative to the US. So in order to counter this unfairness, Donald Trump believes that tariffs is the solution. So what do we know about tariffs? We know that that the end consumer generally pays for the tariff, which means prices in the US will most likely go up. So that's inflationary, and therefore that's bad for interest rates in the United States. We also know that if you just look at it that way, you're being a little bit naive, because we're assuming that Trump just increases tariffs and nobody does anything. So that's what's called the first order effect. That is, the tariff is introduced. But if you're China, you're not just going to sit there and say, okay, well, I'm going to do nothing. Trump has introduced the tariff. So there's what's called second order effects. So how does the other economies respond? And so what we know is that if you're a country and your goods are going to have tariffs imposed on them, what generally tends to happen is your currency will depreciate to take into account that increase in price due to the tariff. So we should see the Chinese currency devalue. The beta is about 0.4. So for every 1% increase in tariff, the currency should drop 0.4 of 1%. So depending on what the tariff is, we should see that currency depreciate. I know Trump is talking about China and other countries. I don't want to mention the other countries because there's geopolitics involved. But we all know that he's targeting China.
I mean, so it goes back to Australia, isn't it? So I mean, there's, as you said, first and second, probably there's going to be a fifth and an eighth. So like at the end of the day, what he decides to do can involve us in that process.
Absolutely.
And and that those decisions is going to make impact on all the students. Especially international students.
Absolutely.
Right? So because international has more, a lot more to think about when you're coming back to study in a foreign country. So I guess that's one of the things that is super interesting. Like economics that's how it works.
Absolutely.
There's one decision that's made in other countries, but at the same time that decision is going to impact an effect of other things, and then it will cause impact on us. And that's why the politics and the economics and the concept of that is very important for students to understand that when you do vote for whoever, and these are what makes a difference in those policies, in those understanding of how that can impact me and my family and the surrounding.
Absolutely. And so given we're in the next 4 years is, I'll call it the Trump era, or Trump 2.0, as people like to discuss. So how does it impact Australia and us here? So if China is going to suffer in terms of economic growth due to the tariffs, they're already slowing down, and they're in a recession, and some are even arguing that they could be entering a depression. And that's before the tariffs have arrived, right? So there were tariffs that were introduced back in the Trump era, and they're still there, but this is an increase in those tariffs. But the Aussie dollar most likely will face downward pressure, because if the Chinese currency depreciates, our economy is linked a lot to the performance of China at the moment. And there's lots of factors that drive the Aussie dollar, but if China is going to underperform, then you'd expect Australia and the Aussie dollar to underperform. So the Aussie could go down. So from a student perspective, if you're an international student, it's good news,
right?
Because as the Aussie dollar goes down, it makes Australia cheaper for international students. So if you're an international student and you're coming here and you're converting your home currency and you have to buy Aussie dollars, the Aussie dollar becomes cheaper and cheaper. So we're all talking about the cost of living in Australia is really expensive. But when you're selling Norwegian krona and buying Aussie, or you're selling Japanese yen and buying Aussie, if the Aussie depreciates, then you're getting more Aussie dollars than you did a month ago. So
But good news, everybody.
So it's good news if you're an international.
Yeah, exactly.
if you're a domestic student, sorry, you don't have foreign exchange exposure. So that's kind of so this is the second order, third order effects that happen when a decision is made halfway around the world. And so if you study finance, or if you study finance and economics, you start to learn these relationships and how they all fit. And it allows you to understand the world a little bit better as to why something moving up and down in price, and what's causing that to move up and down in price.
Yeah.
And given that you're a specialist in portfolio management, and there's lots of change, and as you mentioned, the Australian dollar is probably going to devaluate, what are ways to minimize the risk or be less exposed to the uncertainty of the market in the moment? Is there any strategies that, for example, the student fund is gonna undertake to minimize any losses or maximize returns, even based on the scenario?
Yeah. So the student investment fund, it's a little bit different to the exposure that students have to the Aussie dollar. From a student investment fund perspective, there are companies that are exposed to international revenues. So they might own a business in the UK or in the US, and they're generating sales in US dollars or in Great British Pound, right? So then when they report it, as the Aussie devalues, those revenues actually help boost the value of that company. So some companies will remain unhedged and they're exposed to those movements. Others will implement what's called a hedging strategy, where they try to remove that foreign currency exposure. So from a student investment fund perspective, those that are hedged will not be affected by the changes in the Aussie, but those that are unhedged, students have to take a view of, do they expect the Aussie to continue falling? And so if that's the case, the unhedged company will perform really well because their pounds and the US dollars will be able to convert it to a higher amount of Aussie dollars. Some students will take a view that with the Aussie at 62 cents, 60 at the moment, some people argue it's cheap compared to the long-term average. And so they may take a view that the Aussie could appreciate, not because of China, but because it's just really low. And so as the Aussie gets cheaper, Australian exporters benefit from it. So companies like BHP, who sell copper, Fortescue Metals, who sell iron ore, as the Aussie dollar falls, countries such as China will prefer to buy copper and iron ore from an Australian producer compared to a producer in, say, Brazil. So the Aussie acts as a shock absorber to the economy. So as it falls, our exporters make more money because everyone comes to Australia to buy Australian goods, because the iron ore price in Aussie dollars is cheaper than the iron ore priced around the world.
Yeah, because like in any business, like if your cost of goods is cheaper, you prefer that option, doesn't it?
Yeah.
So I guess a lot of like the same with the country's import-export, is you actually prefer products that's cheaper.
Absolutely.
And that's the bottom line, really, is, and then businesses make choices from that, and then that's what businesses have to kind of adapt and be more flexible to watch the trend and then actually make choices there.
Absolutely.
Yeah.
And so if I can move from the Aussie dollar to the student investment fund to the student, so how do all of these global factors affect the everyday Griffith University student? And I'd say the answer to this is your superannuation fund. And so if you're a student and you work in Australia, you need to put a certain amount of money away into your super fund. You have to select a superannuation fund that you want, and then you have to select the asset allocation in that fund. So you can select a balanced strategy, which is a mixture of stocks, bonds, real estate, cash, and alternatives. Or you can select a conservative strategy that invests in low risk investments such as cash and bonds. You can invest in a growth or high growth strategy where a lot of your super funds is allocated to shares around in Australia and around the world. So, how do you mitigate? Aussie. So the answer is diversification, and it's done through your super fund.
Right.
The good news is you don't have to manage the Aussie dollar exposure.
Yep.
Your super fund is a professionally managed product. Your lifetime savings is in that super fund, and these professionals manage that for you. The question for you is, should you be allocated to low risk investments, balanced investments, or high growth investments? And what the research shows is, particularly for students that are young, like you guys, and most of your listeners.
I think I am.
If you've got 40, 50 years in front of you before you retire, you need an asset allocation to growth assets, which is a high allocation to stocks around both in Australia and around the world. And research shows that with a 40-year investment time horizon, you'll have a higher amount of money for retirement if your asset allocation is exposed to high growth assets. So that's how you manage that. And with superannuation, people have to be mindful that there are three sort of broad risks when you have superannuation. You're exposed to investment risk, inflation risk, and longevity risk. And if we can go through them. When people look at investments, the thing that they're most concerned about is the first one, which is investment risk. And so if people don't like the volatility of the markets, a lot of people will want to invest in cash or in term deposits, which earn you a low rate of return. So it's got low investment risk, but it doesn't keep up with the rate of inflation. And inflation risk is the second big problem that you have to manage when managing investments over the long term. So in order to be able to generate a profit or return that beats inflation, that's where you need to invest in growth investments. And so you need to sort of accept investment risk in order to outperform inflation, because you're exposed to inflation risk. And that's where your asset allocation to equities matters. And there's more and more research that's just come out in the last 6-12 months that is showing the same thing. And then finally, the third risk is longevity risk, and that is, have you accumulated enough money at retirement to be able to fund your retirement? And if the average Aussie, if you retire at 65 today, you'll most likely live on average to about 85 to 87. 85 if you're male, 87 if you're female. But for Griffith students like you guys, you're going to live a lot longer than me. So you'll be living into your 90s, right? So longevity risk is from the moment you retire to the moment you die, your super has to be large enough to fund a comfortable retirement for you from the moment you retire to the moment that you die. So due to health and technology benefits, you're going to live a lot longer than me. So you're going to have more longevity risk than what I'm going to have. So back to the student, savings generally go into superannuation, and they're professionally managed, and they're managing your investment risk, your inflation risk, and your longevity risk.
So I guess upon research is when the students has to, you talked earlier about there is different types of superannuation funds that has different focuses. So I guess for students is to understand that companies have those focuses.
Absolutely.
And then I guess those information is how you have to research for it, and research the company itself and superannuation fund itself, and then make a choice from then. And I think that's a very structural perspective that not many people actually consider. In choosing their super, it can be just whatever fund that your employer kind of selected for you, and they just go, that'd be good. But I guess this is it makes actually a big decision for you in your life or about your retirement. It actually makes a big difference in that sense because of that. And I guess that's what I wanted to really say to you guys as listeners is to make sure that you are researching and know what kind of super that you want, and make a choice then, and just keep going on that super and just invest on it, I guess.
And if you go to the Australian Securities and Investments Commission website, ASIC, there are tools that enable you to look at different superannuation funds, and to be able to make comparisons and to be able to select a super fund that's right for you.
Yeah, that's awesome. That's great.
Yeah. And in the past few years, there's been a lot of change in the investment scenario, where a lot of money has been allocated into companies that practice more sustainable, that have incorporated sustainable practices, and we see that in technology, in agriculture, and mining. How has that shaped the whole way that you approach investments in the past, and do you see any changes in the future? Do you think that trend can only get stronger, or are we going to have some pushback now?
It's a great question, given the podcast of right here, right now, because there has been a lot of changes in the last 12 months. So you're referring to ESG investments, and so for your listeners, in finance and investment, ESG stands for environmental, social, and governance factors. So when you're analysing a new business, or whether you're analysing a company or any form of investment, the traditional method is to analyse what sort of future cash flows or profits does this business generate, and do you want to buy this business, without regard to anything else. When you apply an ESG lens to this, what you're saying is we're looking at the investment merits of this project or this company or business, but we also want to look at what is the environmental impact of this business, how does it interact in terms of social factors. So social factors refers to things like, how does that business interact with its local community? Does it have a good relationship with its employers, with the union movement, and do they produce safe products and goods and services, or do they produce products that people are getting sick or suing over? So that's social factors. And then governance factors is how is that company governed? What is the board, the leadership? Is remuneration correct given the performance of the company? Do they listen to shareholders or not? And so these are all sort of qualitative lenses that are very hard to convert into a cash flow. So ESG sort of has risen dramatically in the last 10 years. It's been around for about 15, 20 years, but in the last 10 years, it's taken a strong foothold. And I think from a European, Australian perspective, it moves forward. But what has been interesting is that in the last 12 months in the United States, things are moving in the opposite direction.
Right.
So there are some fund managers that are being sued in America because of their ESG practices. And so the arguments being made is that you're meant to make investment decisions to maximize return for a given level of risk. And when you've made this ESG investment, you've made return a second priority rather than the number one priority.
Right.
And that's happening right now in the United States. It'll probably take another 6, 12, 18 months before we find the outcome of that. But we're at an interesting juncture in time where in Australia and in Europe, we're continuing to move forward, while the US sort of is going in the opposite direction as of about the last 3-6 months. And so there's a divergence that's starting, and it's very unclear how that's going to evolve. So by the end of 2025 or 2026, if we do a podcast in 2026, we'll have this information and we can discuss it in more detail. But it's really fascinating because it's the first time that I've seen this divergence in this space since its introduction.
Yeah, finance can be a lot more than cash. Those are choices that actually, in other part of the world, a really positive move in the other side of the world is like, really depressing, So that is a clear impact that finance and economics and these concepts can really result to like a teaching moment, like a learning moment. And I think and everybody should have some sort of knowledge in finance and economics to understand that like you can actually be more smart about your money, but you can actually be smart about the decisions you might make with your finance.
Yes.
Or with the information and that we're sharing right now is, to be honest, this is probably a $1,000 appointment right now that we're having one-on-one chats with someone who is an expert and quite being in the academia as well. And I guess I actually want to bring out with your transition from industry to academia. I guess that's something that not many academic people have done, and not many industry professionals have done as well. So I guess that relationship is something that I really want to ask you about. How in that transition, did you feel like your knowledge from industry definitely helped your academic career? And if in that transition, I guess, how do you advise for people who wants to go to academia, or also at the same time who wants to actually just go to industry? So would you have different advice for these two group of people?
Yeah, it's a great question, and it really depends on every individual and what you're trying to achieve. But at the time, I was involved in the funds management industry, and it was only through my friend who happened to be an academic that I kind of learned what was happening in academia. Because when I graduated from Griffith, there was no inkling of doing further research. And, I remember distinctly, I finished my last exam. Back in those days, we had exam on campus. So I
definitely don't want that anymore. So Griffith is definitely going in the right direction for that.
Yeah. And it's the irony is different doors open and close for the rest of your life. Yeah. And if I can give some advice to students, is that there are doors that you're walking through, and then you don't realize that you might be walking back through that door in 10, 20 years time, and you just don't know. But I remember walking up the stairs, the Nathan campus stairs. There's these yellow stairs that go up to the car park. Yeah. And I remember the last exam, I was walking up those stairs, and I said to myself, this is the last time in my life that I'll be walking up.
So everybody's the
stairs.
Same. Everybody's the same. Every graduate's the same.
Yeah.
This will be the last time.
Yeah. So that was 1989, right? So that's a long time ago. And then I end up in 2009. I'm walking down the stairs, those yellow painted stairs. And I remember that moment as I walked down those stairs. Yeah. I'm thinking, oh my God, how wrong I was back in 1989. Look, I think what's interesting about your question is that if you talk to practitioners about academics, a typical practitioner, industry professional will say, academics don't know anything about my industry because they're not involved. They're sitting in their office, in their books or in their journal articles. Yeah. I'm the industry professional. I know what's going on because I live and breathe it every day. So that's the practitioner perspective of academics. You walk into academia, and this is what happened to me. I walked in, and academics have the complete opposite view. Right. And that is, I'm the academic. I see all the latest research in this space. Right. I'm a lot smarter and I know a lot more than the industry professional. Yeah, right. And you industry professionals, you're not up to date with the latest research. Right. And so it's the same view, but it's the other side of the coin. And the truth, and this is where I've landed. The truth is somewhere in the middle. I think what people fail to realize is that both the academic and the industry professional could both benefit from working together. And they could both produce synergies if they're able to sit and work together. And some industry professionals understand that, and some academics understand that, but most don't. And so that's a challenge for both. If you're running an organization, you need to get academia involved. At the same time, if you're at Griffith University or any other university, talking to industry professionals enlightens your research agenda.
And in perspective as well, is right.
Absolutely.
So everybody have different perspective, but just like you just said, industry professionals must say, "Oh, I live and breathe it," and then there's people who say, "I research it and live and breathe it."
Absolutely.
And I think there's two different aspects, but they are both very important to make sure that your next choice, your next decision, is actually informed and quite data driven, really.
Absolutely. And I think in America, the United States are very good at bringing industry and academia together. In Australia, we haven't done that. But for students, you've got a cohort of students, and a lot of them will want to complete a bachelor's degree or higher education to then get a better job or to start their career. And there's nothing wrong with that. And so you'll join the finance or the economics profession like that. There are others that will study in order to become an academic, and so they will need to complete a PhD, and that's a different pathway. And everyone's different. I've just been fortunate that I started in industry and I came to academia rather than being in academia all my life. And so I see both perspectives and I understand both perspectives, and I spend a lot of time trying to work out how do you walk down the middle, and how do I bring both sides together when I'm involved in some sort of research project. Yeah.
And how has how did your degree set you up for the industry once you started? Did it give you a good foundation? Was it how did you find it?
Victor, it's a great question. So I completed economics and marketing. So, I'm a typical, back in those days in the 1980s, this is the 1980s, it's such a long time ago. In the 1980s, I was a typical student. The economics major was the hard major, and I said I want to do an easy major as well, so I'll do marketing. So that's kind of my rationale.
That's right.
I don't know.
I have a lot of respect for economics. This is exactly why.
So I don't know whether it's still, I don't know how marketing works in 2025, but back in the 1980s, the economics was the tough major, and marketing was the easy one. So I did a tough one and an easy one, and I came out. And I'll never forget, I worked at Queensland Treasury Corp, and on the first day of getting that job in the trading room, all of a sudden, I think we had an economist come in, and we had this routine that on a weekly basis, an economist from the Queensland Treasury Department would come to Queensland Treasury Corporation, and they would give us a weekly analysis of interest rates, GDP, inflation, unemployment around the world. And I'll never forget the first week I went in, and the economists came down, and they're talking about inflation and interest rates. And I had this aha moment where it's kind of like, I know exactly what this guy's talking about. I learnt it in the economics major, and I've never had to sort of see it or use it until that moment. And for me, that was the aha moment where you can see it being applied in practice on a weekly basis. And so having that economics background was really helpful. Completing the graduate diploma at the Securities Institute of Australia was helpful in terms of learning the actual mechanics of finance, but having that economics background in understanding the basics of money, inflation, interest rates, GDP and unemployment, those big macroeconomic drivers, it's very helpful. So for me, putting them together in a job where I'm applying it on a day-to-day basis was very helpful for me, and through that, I think I'm able to sort of communicate in a more clear fashion to people the importance of all these things, and it's kind of encapsulated in this course, Global Investment and Markets.
I want to ask, because you gotta be passionate about economics to be in economics. You gotta be passionate about finance. So what makes you passionate about where you're at now with economics and finance? What are you what drove you to be infatuated with this concept?
Great question. why am I passionate about economics and why am I passionate about finance? I suppose, a lot of people don't realize when the average person or when the average student thinks of economics, they might see an economist on the TV in a drab suit or a drab dress, and people say, "Well, gee, economics is pretty boring," and I really don't want a career looking like that. But what people fail to realize is that economics is a dynamic process, right? So all of a sudden, Donald Trump has entered the room, and it's the room called the global economy. So all of a sudden, there's a dynamism in economics. There's a dynamism in finance and investments. So things change through time, and so whilst in economics, in the classroom, you might learn the basic principles of how it works. When you go into the real world and you start looking at the GDP of Australia, so the GDP of Australia has been slowing down dramatically in the last 3 years since COVID. Why? How do we change that? Inflation has gone from basically it was 0 at COVID up to 7% in Australia in 2022, 2023, and inflation's gone now from 7% down to the mid 2s to low 3s, depending on how you want to measure it. That's the dynamism of economics, and for me, it was like, I need to understand why this is happening. Why is this going up and down? And it affects me, because if inflation's high, there's a high interest rate. If I have to borrow money or I have to get a mortgage, I have to pay a high interest rate. I need to understand why I'm paying a high interest rate. So for me, it was like understanding how the world works. That's why I had to learn economics and with finance. So there's a very famous person called Niall Ferguson. I'll never forget this line that he uses, and I really believe this. And he said, not understanding finance and money is hazardous to your financial health. And the point that he's trying to make there is it doesn't matter what sort of student you are, it doesn't matter what you study at Griffith University, you have to have a good understanding of finance and money and investments and how they work. Because regardless of whether you're going to be a marketing manager or a nurse or a doctor or a geographer, you have to make financial decisions every day of your life. And so whether you like it or not, you have to have a good understanding of finance and how it works and making good personal finance decisions.
Yeah, it's the force that, like it or not, is guiding the world every day. So.
Absolutely, yeah.
I love that. I think what I'm sensing is like, I think your character in being curious is what got you interested in economics.
Absolutely.
Like getting curious about how the world works, but also like what I find that very fascinating. I found my aha,
Yeah, absolutely.
Yeah, and that's something that I think with students right now is something that is still like is questionable because they're not at that point yet. They're not sure what they want to do. They're studying what they are studying, but they don't know what their future holds.
Yeah.
Because obviously students, our generation, oftentimes are anxious about our future because there are so many changes, because there are so many unexpected decisions that we have to make.
Yes.
So with that little market of students who are uncertain, what's your advice to them?
I think do a major in finance.
Yeah, I think you raised a really interesting issue, and that is, I wasn't anxious, but I wanted to learn how the world works.
Yeah.
And so the answer was understanding economics and understanding how money moves around. And so for me, that was my motivation. If you're a student and you're anxious, then perhaps studying economics or finance will reduce that anxiety. Interest rates have gone up for this reasons. I've studied this. I now get it. I understand. So if that works, then I recommend you enroll and complete a finance major or an economics major, and then and then when you graduate, you'll have a good understanding of how the world works. And when Trump comes along, so there's a whole group of people that are they're literally having a crisis because Donald Trump has arrived. But we know that if different decisions are made, we know that has this type of effect, and therefore as a person, how can you manage your own finances, or how can you make your own decisions, and I think that reduces anxiety, and if that reduces anxiety, then mate, I mean, you win, right? No one wants anxiety in their life, so you're trying to minimize that as best as possible.
And for students that, like, a completely different set of students that are about to enter the job market, we talked about this on our call, like, a brief call yesterday, about, like, dressing attire, for example. That's very important when you're going to interviews. What are some tips and advice for people looking at getting their graduate positions or internships?
Great question, Victor. Thank you very much for that. I would class myself as old school, and so I've seen everything. I entered the job market before computers were even in houses, all the way through to where we are today. So when you ask that type of question, I'm sort of thinking, what are the principles that have applied regardless of where we are today?
Yeah.
And I think for students, there's a lot of things that you can do that are small changes or small things that can go a long way. I think first, whilst you're studying, the best way to learn things is not only just through the courses at Griffith University, but the best way to learn things is to step outside your comfort zone. So get involved in things that you don't normally do. Whether it's volunteering at the local sports club, the local church hall, whether you want to help the local kids team, whether you want to help at the club here at Griffith, be involved in something that forces you to step outside your house and get involved with people. And through that, you're improving your social, interpersonal communication skills. There is life outside your house or outside your apartment. You get to learn how other people deal with problems. You get to learn other people's perspectives. And these are all learnings that can't happen in a textbook or on a computer screen. They can only be learned by you actually doing that. And so if there's one principle, step outside your comfort zone. Do things you've never done before. It's always, you might be anxious, you might be fearful, but you learn, and you learn by not being in a comfortable environment. So that's kind of sort of principle number one. Principle number two is for job interviews and everything, always wear business attire. I've been in situations where some students think that it's okay to dress like a Google executive, where they're wearing jeans and a t-shirt into a job interview. If you're working in IT and that is the attire of a computer science programmer, and you're programming in Python or in C++, then maybe that's fine. But if you're in dealing in finance, investments, financial planning, economics, accounting, what I'm wearing today is kind of the standard practice in a job interview or at work. And then once you start the job, you can see how people work, and you can either dress up or down. So that's the second principle. The third principle, and this is very, very important, always turn up to appointments on time. Always. and what you should be doing is turn up at least 5 minutes early or even 10 minutes early in case there's problems
on time is late.
People catch trains into the city, and we know that trains today are not as reliable as trains 10 years ago. So rather than catching the train right before the job interview, you should really catch the train 1 or 2 trains beforehand, so that if your train doesn't turn up, there's another one, and there's another one. So you got to think from a risk management perspective. How do I manage risk in my personal life?
Yeah.
And so if I have to go to this job interview, I can't just apologize if the train is late. It just makes you look unprofessional. So that's really, really important. And the other principle is answer the question that they give you, and be honest, be truthful, and I think there's a lot of students that don't quite tackle the question that they've been given, and so that could be a problem in job interviews. So give that a go.
Yeah.
Cool.
Awesome.
We'll in every close, we ask our guests to talk about what our listeners could look out for, or what they should look out for in their in being in contact with you, and being in community, and learning about learning, I guess, how to get involved, to get involved a bit more, and we normally
and see what you do.
And see what you do. Yeah,
definitely.
So we ask our guests to, maybe something that you want students to be involved in the investment fund, or so if there anything that is on your agenda at the moment, that what is next for Professor Robert Bianchi?
I think in 2025, if students want to be more involved in what we do, and myself, please send me an email. Please contact me, r.bianchi@griffith.edu.au. We do have student clubs at Nathan campus and at Gold Coast campus. So at Nathan campus, we have GUAC, Griffith University Association of Students, and at the Gold Coast, it's GUCS, it's Griffith University Students. Griffith University Society of Commerce.
Yeah.
So make contact with them, and what happens is they run different sessions with different accounting, finance, and economic staff, and I'm involved in presenting sort of guest presentations to both of those societies, and also they have networking activities as well. So in order for the students to move outside their comfort zones, those student clubs is a good starting point.
Yeah, I cannot highlight that enough.
Yeah.
And we are looking for students at the podcast as well. So, little plug. But
Absolutely.
We truly appreciate your time.
Yeah. Thank you for being with us today.
And I think
Thank you.
like your amount of knowledge is definitely going to help somebody who's listening right now. And I know that what you're impacting through, Victor, on being in this podcast as well, and what you make, the impact that you're making right now across so many students' lives, is admirable. And I appreciate you spending your time and answering questions on your normal day. And I really do appreciate it.
You, Victor, thank you very much. Thank you for the opportunity, and hopefully we can do this all again same time next year.
Yeah.
Awesome.
Thanks a lot.
That'd be great.
Awesome. Thank you.
Thank you.
Thank you.